Hi guys, welcome to Money Mondays with Sir Chubby. This week's question is about the easiest and the simplest way to start investing. Mutual funds! For this week's question, it's from the lore, Sir Chubby. What do you think of mutual funds? Are they safe and a good investment? In essence, a mutual fund is a paper asset. A paper asset is something that is very tricky because it's an intangible asset, meaning you can't feel it, you can't touch it, you can't taste it. You can only see the paper trail or the forms that you sign or the forms that you have, or the updates that you have from the company that you're investing in. But it doesn't mean that it's not powerful and it's not a very good investment. Personally, I have been investing in a mutual fund company since 2008, and I have been blessed to be able to invest in mutual fund companies who were good, and some companies were also not so good. But it doesn't mean I did not earn. Although this type of investment is intangible, meaning you can't really, unlike real estate that you have the property, or having a business that you have the business, this form of investment is you cannot really touch it or feel it. But it is very advantageous because of a lot of things, but mainly because it doesn't involve hassle. So here's the secret sauce. Most big businessmen or most bank owners, especially bank owners, own the majority shares of mutual fund companies. For example, Metro Bank owner, the T family, owns majority shares of the mutual fund company FAMI, First Metro Mutual Fund. BPI owners, the Ayala Group owns a majority share of PhilAm Investment Inc. Not the insurance, but the PhilAm Investment, where it is the mutual fund company. So meaning, if the big business people or the big owners of banks invest in mutual fund companies, we should be investing in mutual fund companies. And here are the advantages if you are able to invest in a mutual fund company. Advantage number one, low capital opening. So to start a mutual fund company, unlike most banks where you want to open a time deposit, you need 50,000, 100,000, a million. With mutual fund companies, you can start with as low as 5,000 pesos, or between the range of 5 to 20,000 pesos. And secondly, when you start with that, you can just add an additional for a range of 1,000 pesos to 5,000 pesos. You can add that additional investment anytime you want. Number two advantage is the low fees. Since it is a mutual fund company, coming from the word mutual fund, the fees that are charged by the management or the professional fund managers are charged to you as a group. Therefore, the fees are very low. Like for example, between 2 to 5%. So what you invest is net of the 2 to 5% deduction. Number three, again, it is managed by a professional fund manager. So a professional fund manager has been in the market, whether in the bond market or the stock market, for quite some time, and they are professionals. They also have analysts, and they are economists. And if a person who is investing in the stock market, a regular person like me, can hit an average of 10% to 20% a year, how much more for a professional fund manager that does nothing else but invest in the market or in the bond market. Number four, and one of the best advantages of investing in a mutual fund company, high interest rates. And I will repeat, high interest rates, especially compared to inflation and the banks. With banks, you usually get between 1 to 2% per annum, and that's not net because you still have a withholding tax of 20%. And with inflation, the average in the Philippines is between 5% to 6% per annum. So in mutual fund companies, you can usually get an average, even with a bond fund, between 8% to 15%, especially if it's an equity fund. Especially if it's an equity fund. For example, if you invested 10,000 pesos, but after 1 year, your 10,000 pesos will be now 11,500 if the interest rate is 15. So again, it is an average. Most people will question, sir, is it fluctuating or fixed? And some people would consider it as a disadvantage. But for me, it's an advantage because the fluctuation actually allows you to invest more using the same amount of money. For example, if you invest again, let's just say 1,000. For example, this month, the market is down, so it's much cheaper. When the market is down, you actually buy at a discount because the market is down, so you accumulate more shares, making your total shares much, much more bigger than a good bull market. Number five, and last advantage, and this is most of the questions that people ask me, sir, can it be withdrawn? Yes, but again, the goal when you invest in a mutual fund company is not to withdraw it, not to invest it this month and withdraw it next month. Again, it should be long term. Although, and this is a good advantage, you can withdraw it anytime. The only challenge is most mutual fund companies give incentives for people who don't withdraw or withdraw in a longer period of time. For example, if you withdraw after 6 months, there's no charges. But if you withdraw within 2 months or 1 month or even 3 days, you can actually withdraw, but there's a charge between 2 to 3%. When you start with a mutual fund company, usually with 5,000 or 20,000 pesos, depending on the company, you go through a broker, usually a mutual fund broker or an agent if he's from a insurance company. By the way, not all insurance companies have mutual funds. Usually they tie up with mutual fund companies, but most of the big insurance companies have mutual fund companies. Anyway, when you start, you have the 5,000 pesos, you give it to a agent or a broker. You sign up a form. Once the form has been submitted, you deposit it directly to the bank of the mutual fund company, and you can actually just give that with the certificate of deposit or the deposit slip of that bank. After that, once the mutual fund company receives your money, you are now given a NAV piece certificate or a net asset value per share certificate, meaning you now have a certificate of how many shares you have in that mutual fund company. And after that, in a regular basis, usually monthly or quarterly, they give you updates of your shares and how much your money has grown. Or, better yet, for you to be a proactive investor, you can check what's the rate of your mutual fund in www.pifa.com.ph. After that, once you're already a shareholder of the mutual fund company, you celebrate also, of course, no? Then, what you do is you monitor and, of course, you target when and how much will you add on a monthly basis or a quarterly basis. Again, it depends on you. In conclusion, mutual fund companies are one of the biggest investments that has not been taken advantage of the average Filipino. Because again, as Filipinos, starting an investment like 100,000, 200,000 is too much for a regular Filipino. But I believe a mutual fund investment for 5,000 pesos is very affordable. If you can't afford it one time, then save for it. Like what we just taught you open a separate account. But when it reaches the 5,000 threshold, now you can withdraw it and put it in your mutual fund account. And lastly, the most important thing in investing in mutual funds is the discipline and the consistency. If you don't have the self-discipline to save a portion of your income every month, again, the vehicle, which is very good, a mutual fund vehicle, is useless unless you save money every month and invest it in your mutual fund account. For more questions about mutual funds and a detailed discussion about mutual funds or any other type of investment, please message us or email us at inhimbusinessconsultancy@gmail.com. Friends, thank you so much for watching, and Dolor, I hope I was able to clarify things for you. And again, if you have questions, just post it below. And again, please don't forget to do what you love and love what you do. You are a passionpreneur.